Thank you for joining me on The Things That Bother Me. This channel isn't about random outrage, it's not about nostalgia, and it's not about pretending generational differences are just attitude problems. It's about structure. It's about patterns that repeat long enough to become normal. Economic patterns, political patterns, generational patterns, because once something becomes normal, people stop questioning it. And today's episode questions something that almost never gets said out loud. This is episode 5, the triple retirement stack. We're going to talk about layered security, not one income stream, not one retirement plan, layers. Social security, defined benefit pensions, 401ks and market portfolios, and home equity that exploded in value, 4 cushions. At the same time, younger generations are entering adulthood with student debt. No pension, volatile retirement accounts, high rent, and uncertainty about whether Social Security will even be intact. This episode isn't about attacking retirees, it's about acknowledging structure. Because when one generation retires on stacked insulation while 3 below them inherit fragmented risk, that's not just personal success, that's positioning. And positioning has consequences. Today we're going to break down how the stack formed, why it aligned perfectly in time, how it was politically protected, and what happens when the foundation underneath it starts to strain. Let's get into it. Episode 5, the triple retirement stack. There's something no one says out loud. A lot of boomers aren't retiring on one income stream. They're retiring on 3, sometimes 4, Social Security, a defined benefit pension, a 401k and/or stock portfolio that rode decades of buybacks and market expansion, and a house that doubled or tripled in value. That's not survival. That's insulation, layered insulation. While younger generations are told to diversify risk, boomers at scale were handed diversified security. And here's the part that should bother you. It wasn't random. The timing lined up perfectly. They entered adulthood when tuition was affordable. They bought homes before supply tightened. They worked during stronger union eras. They accumulated pensions before companies eliminated them. They rode the longest bull market in modern history. They refinanced into low rates. They protected zoning. They defended asset inflation. Then they retired on the stacked outcome, 3 income streams. And sometimes they still tell younger generations, you just need to plan better. This episode is about the stack, not theory, not culture, not feelings, the stack. Section 1, Layer 1, Social Security. Let's start there. Social Security was designed as a base layer, not a luxury, not wealth, a floor. Boomers will receive trillions collectively over their retirement years. They paid in, yes. But they also benefited from a demographic structure that favored them, more workers supporting fewer retirees during much of their prime earning years. Now the ratio has flipped. Fewer workers, more retirees. And younger generations are told, you'll probably get less. Benefits may be reduced. Full retirement age might rise again. Social Security might not still be there. So the base layer that boomers rely on as guaranteed is already unstable for those below. They retire with it. You inherit the uncertainty. Section 2, Layer 2, the pension era. This is the one people gloss over. Millions of boomers worked in an era where defined benefit pensions were common. You worked 30 years. You got a check for life, not tied to market swings, not dependent on quarterly earnings, not vulnerable to stock crashes, a predictable income stream. Younger generations, defined benefit pensions are rare outside government work. Most private sector workers today will never see one. That wasn't a natural disappearance. Companies replaced pensions with 401ks because it shifted risk from employer to employee. Boomers accumulated pensions. You inherited volatility. They get guaranteed money for life. You don't. That's Layer 2. Section 3, Layer 3, the market wave. Then came the bull market. Buybacks exploded. Corporate tax cuts boosted earnings. Deregulation expanded margins. Globalization increased corporate profitability. And who owned the bulk of the stock market during the height of this run? Boomers. Retirement accounts grew. Home equity grew. Portfolio values climbed. While wages stagnated for younger workers, asset values inflated for older holders. That's not bitterness. That's math. When you own assets, inflation works for you. When you earn wages, inflation works against you. Boomers were positioned on the asset side of the equation, and they rode it, and never looked back. Section 4. Layer 4. Home equity. The silent stack. This one might be the most powerful. Homes purchased in the 1970s, 80s, 90s, modest prices, lower price-to-income ratios, less investor competition, fast forward, restricted zoning, limited new construction, demand spikes, low interest rates. Home values double, triple, quadruple in some regions. A paid-off house becomes a store of wealth, a borrowing instrument, a rental property, a legacy transfer. Younger generations, locked out, competing for scraps, paying record rent. Saving for down payments that move further away each year. The same generation that benefited from appreciation often defends zoning policies that restrict supply, protecting equity, protecting scarcity. Layer 4 isn't just passive gain, it's politically defended. Section 5. Stacked security versus fragmented risk. Now zoom out. Boomers at scale retire with Social Security, a pension, 401k and portfolio. Home equity. Younger generations enter adulthood with student debt, volatile 401ks, high rent, no pension, uncertain Social Security, gig work instability, one generation layered protection. The next inherited layered risk, and when you layer protection long enough, you stop seeing it. You call it normal, you call it earned, you call it discipline. But when the stack only exists because of timing, policy, and demographic leverage, it stops being just individual virtue. It becomes generational positioning. Section 6. The moral defense. Here's where it gets edgy. When younger generations talk about housing prices they're told should have bought earlier, when they talk about pensions. Times change. When they talk about Social Security strain, we paid in. When they talk about wage stagnation, work harder. The defense always centers on personal responsibility. But personal responsibility does not create demographic advantage. It does not design pension structures. It does not inflate home equity. It does not rewrite tax codes. It does not authorize buybacks. Policy and timing do. And boomers benefited from both. Section 7. What the stack costs below. The triple retirement stack doesn't exist in a vacuum. It is funded. Social Security depends on current workers. Pensions depend on contributions and markets. Market growth depends on corporate profit extraction. Home equity depends on scarcity. When 3 layers are stacked for one generation, someone else supports the weight. Younger workers are funding Social Security, paying inflated rents, earning stagnant wages, facing volatile retirement structures, competing for housing in artificially tight markets, and then being told they complain too much. That's not just generational difference, that's asymmetry. Section 8. The transfer nobody talks about. Here's something almost never said directly. The triple retirement stack isn't just security, it's a transfer system. Social Security is funded by current workers. Medicare is funded by current workers. Market growth is driven by labor productivity. Corporate profits are built on payroll suppression. Home equity inflation is sustained by younger buyers paying higher prices. Every layer of the stack is supported by activity below it. This is not blame, it's mechanics. But when the generation receiving the most from the stack also resists policies that would raise wages, expand housing supply, or strengthen labor power, you get imbalance. You get extraction without replenishment, and the math gets tight. Fewer workers, more retirees, higher healthcare costs, longer life expectancy, shrinking birth rates. You can't stack security upward forever without widening pressure downward. At some point, the support beam feels the weight. And right now, the support beam is younger workers. Section 9. Political insulation. Here's the sharper edge. Boomers are not just the largest retired cohort. They are also one of the most politically active. Higher turnout. Higher local meeting attendance. Higher property owner participation. That means the retirement stack isn't just economic, it's politically insulated. When Social Security reform is discussed, older voters mobilize. When Medicare adjustments are proposed, older voters mobilize. When property taxes are debated, older homeowners mobilize. But when tuition relief is discussed, when housing supply expansion is proposed, when wage reform is debated, the urgency shifts, the energy drops, protection of existing layers is intense, expansion of access below is conditional. That's not random behavior, that's rational self-interest. But when self-interest dominates long enough, it becomes generational identity, and identity is harder to challenge than policy. Section 10, the illusion of permanence. Here's the part nobody wants to hear. Stacks feel permanent until they aren't. Markets correct. Healthcare costs surge. Demographic ratios tighten. Federal budgets strain. Political coalitions shift. The belief that retirement security is untouchable depends on the strength of the base. If the working population shrinks, if wages stagnate, if younger generations disengage, if resentment hardens into political backlash, the stack becomes vulnerable. You cannot build multi-layered insulation while weakening the layers that fund it. And if younger generations feel permanently locked out, they will eventually vote differently. And when that happens, the insulation may not feel as stable as it once did. The irony is brutal. The same self-centered protection that built the stack can destabilize it, because systems require renewal, and renewal requires access. If the latter is lifted long enough, fewer people will care about stabilizing the platform. Translation: younger generations will vote to take away the programs that they may never receive. In closing, strip it down. Layer 1. Social Security. Layer 2. Pensions. Layer 3. Market portfolios. Layer 4. Home equity. 4 layers of insulation, not accidental, not mystical, not purely individual brilliance, structural timing, policy alignment, demographic leverage, asset positioning, and for decades that structure held. Boomers retired into stacked security, while younger generations entered fragmented risk. That's the reality. But here's the deeper truth: stacks don't float. They are supported. Social Security is funded by workers below. Medicare is funded by workers below. Market gains are generated by labor below. Home equity inflation depends on buyers below. Corporate profits depend on wage discipline below. Every layer above rests on activity beneath it. And for years, the generation benefiting most from the stack also resisted expanding the base, resisted housing supply, resisted wage growth pressure, resisted structural reform, resisted redistribution of risk back upward. Protection of what was already secured became the priority. That's self-interest, not evil, but self-centered. And self-centered policy has gravity, because the more you protect insulation without reinforcing the foundation, the more strain builds underneath. You cannot have fewer workers, longer retirements, rising healthcare costs, volatile markets, stagnant wages, restricted housing, and assume the stack remains untouched forever. Demographics are not sentimental. Budgets are not emotional. Markets are not loyal. If the base weakens, the insulation cracks. If younger generations feel permanently locked out, their political behavior changes. And if political behavior changes, so do priorities. The triple retirement stack feels permanent because it worked for decades, but permanence is an illusion sustained by participation. And participation depends on belief in fairness. When 3 generations fund a structure they may never experience, belief erodes. And when belief erodes, so does stability. This isn't a threat, it's physics. You cannot layer advantage upward indefinitely while compressing opportunity downward and expect equilibrium. Eventually, pressure equalizes. The irony is almost poetic. The same self-centered protection that secured the stack may ultimately destabilize it, because systems survive when opportunity circulates, not when the oldest among you have hogged it all for themselves. Let's say it plainly, the triple retirement stack wasn't luck, it wasn't just discipline, it wasn't just working hard, it was timing, it was structure, it was policy alignment, it was demographic advantage, it was asset positioning. It was just being lucky, being born in the years they were. Layer 1, Social Security. Layer 2, Pensions. Layer 3, Market portfolios. Layer 4, Home equity. 4 layers of insulation built during the most expansion-friendly decades in modern history. And once secured, those layers were protected. Protected politically. Protected culturally. Protected at the ballot box. Protected at zoning meetings. Protected through defense of stock growth and tax structure. Meanwhile, 3 generations below are entering adulthood into debt, volatility, housing scarcity, retirement uncertainty, and a worker-to-retiree ratio that tightens every year. This isn't about blaming people for retiring. It's about acknowledging that insulation at the top rests on pressure at the base. Stacks don't float, they're supported. And if the support weakens, because wages stall, because housing locks out buyers, because younger generations disengage or push back, the insulation won't feel as permanent as it once did. Security that isn't renewed eventually calcifies, and systems that calcify eventually crack. If this episode made you uncomfortable, that's okay. Uncomfortable conversations are usually the honest ones. If you saw the pattern, if you felt the weight of it, hit the like button. That tells the algorithm this isn't just noise. Share it if you think more people should stop pretending this is random. Drop a comment and subscribe below. Because the next episode isn't about how the stack formed, it's about how it was defended, and that's where this series gets even sharper. This is the things that bother me. Until next time.